Have you ever felt?
Are you listening? Damn.
All right, so imagine you had to go to the grocery store, but instead of having a market to go to, you had to go individually to each maker of that product, or the baker for bread, the butcher for meat, the farmer for apples, the farmer for corn. Like, it would take you all day. And then when you got to these destinations, you probably would have to barter with them. You bring cash. Even before cash was made, you can imagine like trading and bartering something you made for something they made. But also understand that it's just supply versus demand. So the market brings buyers and sellers together. We use money to buy pieces of businesses, which you all know I think is the best way to make money. Look at the top 10 richest people in the world. They're all businessmen, except for Warren Buffett, who is an investor, arguably a businessman, because it takes business sense to be a good investor. All right, so I'm going to get right into the stock market and illustrate on my handy iPad how it works, and hopefully you guys will pick up a few things. Let me know in the comments below what I might have missed that you may be looking for, and I'll definitely keep popping up videos here so you guys get more knowledge and become more comfortable with investing yourself. And just that little bit of knowledge can help you, because we're trying to make less mistakes, and through life, through our investment career and horizon, that'll only make us more money by focusing on making less mistakes. All right, guys, here we go. So how does the stock market work? All right, you got two sides, okay? This is the supply side, and this is the demand side. Hopefully I haven't bored you yet, but basically you got to learn bid versus ask, okay? So when you're an investor and you're looking to trade stocks, when you buy, you're placing a bid order, and when you sell, you're placing an ask order, okay? So think about that. Bid, buy, ask, sell when you are the investor. And the market serves as an intermediary to take all these orders and connect them back to you, the investor. So the market sets the price. Now, how does the market set the price? Okay? Going back to our grocery store example, the grocer, the retailer, actually sets the price for you. So there's no bartering done. On the exchange, in the market rather, the stock market, you can per se barter, but you risk not getting the stock. So there are several different types of orders. So these are orders going in and receiving orders coming out. So there's a market order, a limit order. Okay, now there's a market buy, market sell, limit buy, limit sell. There are stop orders, limit buy, sell orders. It's very complicated, and I'm not going to get into all that detail in this video. Maybe if you want to, I can get into that a little later, but for our purposes, it's not very important. What I want you to know is that market orders can be very dangerous. Again, you have the bid, where investors are willing to put in their money in exchange for a piece of the business. So let's say you have one guy who will put in, $160 for 10 shares of Apple, and then there's somebody else below him, $150 for 10 shares, and so on and so forth. Okay, now you have the ask or the supply, because this is all the people willing to sell their stock. Now we'll probably go the other way, and maybe we start with somebody willing to take 165 for 10 shares, and another guy above him 170 for 10 shares, and 175 for 10 shares. So the market sits here in the middle. there won't be a trade because nothing matches. It's trying to match buyers and sellers. So when somebody changes, or when somebody at their computer puts a market buy order, again going back to this terminology, he will send to the market an order to buy Apple, we'll call it Apple today, at the best available price. So he is putting in a bid order because he wants to buy, but it's a market order, so he's going to buy it at the immediate price best available to him when it gets to the market. So when he gets to the order, gets to the market, he's executed at 165, and now the market price is 165. So what happens to all these other guys? Well, they still sit there. That's still going to be the bid price. Okay? This guy will probably get out of the ladder because he sold to the investor at home who had a market buy order. And so the new chain would look very similar to the last one if nothing else changes, except the new ask price would be 170. The new best ask price. Let me get some room here. So you'd still have both of these guys. And this is the best ask. And this is the best bid. And nothing has changed. But if you're seeing this price move up, again, because the price is now 165, that's the new market price from this transaction up here because of the market buy order. A lot of times what happens is these people who are sitting and waiting aren't patient, and they see the tick up in the price and say, oh God, I need to get in. So they cancel this order and say, let me get a market buy. And then they just get executed at 170. And now the new market price goes to 170 and the stock jumps. And everybody starts to get into the stock because they love the action, blah, blah, blah. But then history repeats itself and you see stocks trade like this, okay? The only certainty in stocks in the short term is that the chart is going to go to the right. We don't know if it's going to go up, down, up, down, up, down. In the long term, I believe they're going to go up. If you just look over time at history since the 1930s, it's going to go up because of compound interest, because of business, because of our economy, where we are. So we're very fortunate to be where we are, one. Now, how it gets there, it's going to be some good times and some bad times, right? So it doesn't always go up in a straight line, obviously. And that's why we need to know the rules and the fundamentals so that we limit our mistakes during these down times, okay? You want to be patient and get in at a good price. And to help you do that, you need to know how the market works. So that's how the market price moves. And now that you know that, hopefully it will instill some good, sound investment principles.